Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for June 25th through the 29th, the final week of June. So we're going to be talking about the four main indexes, going into discussing some stocks that were affected by the trade war, continuation of the trade war that began last week, kind of continued on to this week. Some opportunities came up. We're going to be discussing some pharmaceutical stocks that were hit, primarily weed. On also Amazon came on board, say they're going to be buying a specific, acquired a company that Walmart had been eyeing. That drove three of some stocks, pharmaceutical stocks, also down. Talk a little bit about financials, and then go over home construction, oil that jumped up nice and high this week, going over bonds, gold, silver, and kind of ending it there. So I'm going to try and make this really quick. It is 2:45 in the morning right now. It's pretty late. I actually had recorded this earlier, but apparently my mic was switched to my other mic, which is currently turned off, so that was really fun. So here on Facebook, I posted earlier this week, Monday, continuation from Friday's trade war initiation. Stocks plummeted. I know these are some leveraged ETFs, that's why they're a little bit higher. NASDAQ got hammered the most on Monday, just due to, President Trump came out Monday saying that they want to kind of restrict China from investing in U.S. tech companies, and also tariffs, trade wars. So let's just jump over, talk about the four indexes first, and then if there's anything special over on Facebook that I shared out this week, we'll kind of talk about that later. So S&P 500 down 1.33% this week. Started off negative due to any continuation of the trade wars. Tuesday, Wednesday, not a lot happened that day. Thursday had some assistance from the financials, as you know, stress tests on Thursday. Friday, continuation from technology, semiconductors kind of helping them out, and 5-day change up are down 1.33%, still up year to date 1.67% for the S&P 500. Dow Jones 5-day change down 1.26%. Again, continuation from last week's trade wars. Not a lot happened until Thursday, where they had some more movement due to the financials kind of picking up. Friday, I'm not sure what helped them out on Friday. I know financials, I don't think they really helped them out. Financials came back down on Friday, so maybe they had some tech stocks in there that kind of helped them out. NASDAQ hit hard on Monday, just again, due to Trump wanting to kind of push on China harder, and also announcing that they're trying to restrict China from investing in the U.S. tech companies kind of going forward. So that hit the NASDAQ the hardest. Year to date, up 8.79%. So NASDAQ is the furthest down this week, followed right behind by the Russell 2000. 5-day change down 2.52%. 2 out of the 5 days in the positive. A lot of movies. I've seen some movement money going into the Russell 2000, but also coming out of the Russell 2000. So I'm not sure how people are feeling right now about the economy, whether it'll continue to grow. I see a lot of people, everyone's still holding. Everyone's kind of still holding their positions because everything's kind of going nice and steady, but we'll kind of see how the financials play a part. We can't gain any higher highs until the financials get their kind of act together. So stock futures currently looking positive. S&P 500. I'm going to go ahead and refresh this. 5, 10, and 20. After the refresh, we still got 5, 10, and 20. So that's pretty accurate right there. So a couple of stocks here that moved in the after hours. Nothing really there that pops out. Stuff I like to look for are financials. So here, for example, not a financial, but General Electric kind of continue to kind of climb in the after hours. I thought we had Bank of America there kind of climbing here in the after hours. Comcast, yeah, not a whole lot of financials. I like to look at tech. Lots of tech stocks moving up positive, more positive there than negative. And I like to look for both positive tech and financials. That kind of helps me out kind of see what may happen in the following day. So trade wars happened on last week, kind of continued on to this week. Couple of stocks that were affected: FedEx, UPS, Harley Davidson. So FedEx down 6.08% this week. Transportation 3% loss on Monday, 3% loss on Wednesday, 1.5% nearly on Thursday. Down year to date 9.01%. I would like to myself maybe make a video on transportation and pharmaceutical stocks, because these are both a couple here that are getting hammered by trade wars, and also Amazon kind of getting into that pharmaceutical sector. So I think that would be kind of an interesting maybe topic to kind of discuss. So UPS down 6.57% as well. Year to date down 10.84%. So again, I like to take a look at these. You can see earnings growth year over year. Very good looking here. Very good looking here. Growth and valuation in comparison to this year, last year. And then Harley Davidson, not a stock I would invest in myself. The consumer, like who they target specifically from the consumer base, I would assume it would be pretty small. I don't own a motorcycle myself. Don't plan on having one. Don't know anything about mechanicals. I'm all tech and IT. So down 4.82%. They had some EU impose some tariffs on them, and then they said they're going to try and transition some of their factories overseas. Trump said nope, and kind of hit them on the head. So we'll kind of see how that one kind of plays out in the following weeks. Campbell Soup had some news on Monday. Not really news, but there was some news, it was kind of news, that they were some sort of interest from a possible takeover from Kraft Heinz. So their shares did pop up nearly 10% on Monday off that news, but kind of really tampered off, losing more than 5% of it in less than a couple days. And a 5-day change up 5.03%, still down year to date 15.73%. This is a good long-term buying, long-term dividend stock. I know I've seen PP Ian, I believe is the channel, PPC Ian. He talks about dividends, straight dividends. I believe this one he had been invested in. Kraft Heinz didn't really move anywhere due to that news. You can see here on Monday after the announcement of their possible interest, they had some slight growth there, but probably just the regular movement of the market. They gained it, they lost it, continued down throughout the week. 5-day change down 0.62%, still down year to date by 20%. This is why it's important to kind of target if you're buying dividend stocks inside your dividend portfolio. I love growth and dividend paying stocks. So my portfolio was full of growth dividend paying stocks such as AbbVie, Intel, Microsoft. I had Cisco, a few of them. And continuing on here, we have General Electric. They were on the news this week. Their CEO or some of their company position announced that they would spun off some of their exposure to the healthcare sector and sell off its positions to Baker Hughes. This transition won't actually happen until the next 2 to 3 years, and during this time they have also said that they plan on maintaining the current dividend. I know a lot of people over on the Facebook dividend group chats, they're really discussing this one. I thought it was crazy that people were buying this one, not only on Tuesday after all this growth happened, but also on Wednesday. People were announcing on these Facebook groups that they were buying 1,000 shares of this stock. So 1,000 shares. I've seen a couple people post this stuff. So 1,000 shares at 1361 would be 1,000 shares. So let's multiply that by 1361, my math. So they spent $13,000 on General Electric. I do see that there's more upside to downside, but as they're cutting off pieces of their company, I think that's going to actually cause their stock portfolio or their stock price to fall even further, maybe down below the $10 price mark, such as Ford, down in that. Ford's actually at that 12-15 area, but I don't know what to do with General Electric. So there was some marijuana news coming out this week. I couldn't exactly find out. This is some earlier news talking about how stocks moving higher as Canada begins to legalize stocks, but Wednesday they plummeted. Canopy growth down Wednesday 10.79%. They also lost 5% on Monday and Friday. Gained quite a bit on Thursday, maybe off some news other than what I had read. So a lot of those marijuana stocks fell down. An ETF that I like to follow is ticker symbol MJ. This is mainly pharmaceutical, Tabasco, has some marijuana stocks in here as well. Looks like we have JWPH. This is the company I'm going to be talking about here in just a second. They're going to be putting out a drug that's derived from cannabis. So we're going to be talking about that here in just a second. So actually, here it is. So Rite poised to sell its first cannabis-derived drug. So this company here, ticker symbol GWPH, which we just saw, GW Pharmaceuticals, It's a British drug maker. It plans to produce this cannabis derived drug. Rite said that they're going to be selling it once the DEA schedules it. A couple other pharmaceuticals, such as Walgreens, CVS, Walmart, didn't comment whether they would actually plan on filling those prescriptions. I think this is a good push for Rite, which has fallen by more than 15% just in the last 5 days, all within this last portion of the week. Tuesday, huge hit. Thursday, huge hit. Friday, huge hit. Down year to date by 12.18%, down at $1.73. I think this could be a great buying opportunity, but at the same time, the stock has their growth has gone down. Their price to earnings ratio is non-existent, meaning that they don't have any sort of earnings. Yeah, so crazy. I think this one would be a kind of a fun one. So I would like to look at transportation and pharmaceuticals. I think there's some potential buys in that sector. Here we have, here's the pharmaceutical company that actually producing this drug. So GWPH right here, GW Pharmaceuticals. It's down 5 days, 7.74%. Again, Wednesday, a lot of those marijuana stocks were kind of hammered, this being one of them. Still up 5-day change, 5.70%. If this is legalized and begins selling through Rite, Walmart, CVS, Walgreens, this stock is going to climb. It is pretty high. I'm not sure as far as growth goes. Let's see over the last 5 years. Dang, okay, up a little over 1,500%, so very high. Amazon out on the news this week. They shot up on Thursday due to the announcement that they're going to be purchasing PillPack. This is a company that Walmart had actually targeted and had details of actually buying, but they were really kind of not really doing anything with it. So Amazon said, hey, we're going to throw you $1 billion, and they are planning on closing this deal. And Amazon's already sort of licensed in 49 states. I don't know how I feel about ordering my drugs from Amazon. If I do get some sort of prescriptions, I always just go down to somewhere here local at Walmart or Walgreens, and who knows, they like to jump into all sorts of different sectors, buying up Whole Foods and buying up a couple other companies here within the last couple of years. So we will see how this kind of transitions out. That really affected Walgreens after the announcement, going down nearly 10%, losing 11.23% over the last week. 5-day change down 17.36%. So again, taking a look at a couple of these, I think they would be some good buys in here. They show a lot of growth in this companies. Amazon's not just going to jump into there and knock it out over the short term, maybe over the long term as they, fix up and button up the whole process of this, of how they plan on moving forward. Then we might see them kind of take out their competitors, such as they have done with Toys R Us and other companies. Moving into the financials, Thursday, so financials were down. Let's see here. Let me bring in my ETF here. So Monday, Tuesday, Wednesday, overall financials were down. With Thursday, they did some stress testing. Lots of the companies here within the United States passed. A couple European companies did not pass, but still moved positive. That helped the financial sector on Thursday move positive. Here, this is an ETF, ticker symbol XLF, moved up 0.87%. I don't invest in any financials right now. I'm not 100% sure that we're going to be pulling it out of our current trend that we're kind of sitting in. Without the financials, we're not going to continue to move higher back into our highs until the financials kind of kick it. And right now, just due to the way that everyone's kind of focusing right now on the flattening yield curve, the short term, long term are almost the same, and that's kind of raising some concerns because we've had so many rate hikes. I believe 3 in 2018, or I know we had a couple in 2017, but we went from 4.25% prime yield back a year ago. We're at now 5%, and this is supposed to be bringing in more money into our banks, and it's really not helping them out. So even after the big stress test and the big announcement that they're going to be bumping up their dividend payout by 30% and doing a bunch of share buybacks, JP Morgan continued to fall on Friday. Goldman Sachs also continued to lose 1.25% on Friday. on that news. So if you guys do follow the financials, ticker symbol XLF will help you out there. Kind of moving into construction now. So this is an interesting article. I know locally here where I'm at on the West Coast in Oregon, our housing economy is crazy right now. I was listening to some realtors and some agents talking about how many offers are coming in. I put an offer in this week as well, trying to buy another house, but I haven't bought a house yet. I've made several different offers. None of them are sticking right now, but it's completely fine. As long as I get 1 out of the 10, I will be happy, and that'll be a nice little profit there. But offers are in 28% year over the last year. At the same time, they're still seeing a lot of growth. Companies out there that are doing home construction are able to raise their prices. They're seeing a lot of movement, not only on the, here on the South, the Midwest, the West Coast, the Northeast. Everything is currently climbing. A couple stocks that jumped up very nicely this week due to earnings. Ticker symbol LAN, LEN. This is Lennar Corp. They released their earnings on Tuesday here. You can see that basically the builder announced that their earnings beat Wall Street's expectations. Their new home orders were up 62% higher compared to last year's orders, and also looks like they've increased their prices by 10%. I know prices here locally have shot up crazy. There's several groups here building houses. There's 4 different sites that are being built throughout different cities, and even houses that are built back prior to the 2000s are still selling like wildfire. So lots of movement. Stock is currently down 16.98% year to date. Another stock here that's in that construction sector is ticker symbol KBH. This is KB Homes. They also did their earnings. They beat expectations. Company moved higher. And very nice looking there. 5-day change, 5.79%. Okay, so I have 2 ETFs to share with you guys. I always talk about my ticker symbol XHB. This is just home builders, so anything that has to do with home building. This one primarily focuses on the construction portion of home building, so that's why it has a very high percentage of Lowe's and Home Depot. When you're trying to redo your kitchen, your carpet, your paint, your cabinets, your bathroom, you got a Home Depot or a Lowe's because they offer some great discounts, and you can get a lot of your stuff there in bulk. But it also has Toll Brothers. It also has a couple, Williams-Sonoma, that's a paint company, and a few others here, Whirlpool for their devices and such. But this one here, ticker symbol ITB, this is more on the construction end, so it has Toll Brothers as well. It has Lennar Corp. It has Home Depot, Lowe's, a smaller percentage, Sherman-Williams. So these are both different ones that kind of track the construction portion and also the home building portion. So if you guys are interested in that, check that out. Before kind of jumping over into oil, I was watching a video this week that was following Robert Kiyosaki. It was actually saying that he said he is selling houses. He believes the economy right now is in a bubble as far as the housing prices go. His houses that he bought a couple years ago, people are offering him double, triple, quadruple what he originally paid and what he believes the value was at. So he is unloading his current portfolio, not all of his portfolio, of course. He's kind of releasing a couple of the stocks that releasing a couple of the rentals and basically his buildings that he deemed kind of not very profitable. So he is selling his houses. If you guys would like, just look up on YouTube, Robert Kiyosaki selling houses. And I'm sure you'll kind of find a video on that. Now, moving into oil. Oil prices shot up. 5-day change, 7.42%. This kind of came, I'm not sure if it was early in the week or towards the end of the week, but looks like probably on Tuesday. That's when we had that big spike coming up. So the U.S. came out, said that they want all companies with ties to Iran to cut their ties with Iran by this November. They really began to push it by the end of the week. They were saying that anyone that that imports from Iran are going to face some economic sanctions. So the U.S. is really pushing hard on oil, and 5-day change up 7.42%. Year to date 25.4%. This is actually one that's crazy, beating all the indexes. Imagine if you had bought into an oil ETF at the beginning of the year. So silver and gold continue to go down as the dollar gets stronger. I saw the dollar jump up pretty huge early in the week. I'm not sure if it lost some of its momentum towards the end of the week. That's something I think I'll add in my next weekly recap is the price of the dollar. I don't know what ETF or whatnot tracks that, but I think I'll add that in prior to my silver and gold, because right now silver going down 2.26%, gold shares also down 1.4%. So as the dollar gets stronger, the minerals, silver, gold get weaker. Bond market, as you know, remember back on the S&P 500 here, S&P was tanking on Monday. Guess who bought a lot of bonds? Lots of bonds were purchased here, propping up the indexes here, and kind of continuing out there. 5-day change 0.29%, still down year to date by 2.92%. And this is just same information, no change from last week. Prime rate stayed the same. Fed funds, I'm not sure where that was at last week, but I know I mainly look at the prime rate, look at our current interest yields and such. So 5-year, 10-year. Looks like our 5-year is kind of coming down slightly, but that is basically it. What do we post over on Facebook? We talked about, Market Monday dip. I shared out a high yield savings. If you guys open up an account over at Marcus right now, they actually have a high yield savings account of 1.8%. So if you put in $10,000 into your savings account, you'll get $180 of interest paid out to you throughout the year, plus it's compounded each month. So I made a calculator talking about that. I posted it right here. You can download it, save it as your own, export it as an Excel document. Chicago, they had some national economic slowdown. So I thought that was kind of interesting article there. Kind of posted about 5 things to watch for the bank stress test on Thursday. Banks aren't making any money right now. That yield curve, which is supposed to be helping them out and bringing money into them, isn't helping them out. They're still doing they had a lot of dividend increases. I believe someone had posted an article here saying, whoops, not that one. They had posted an article talking about how many companies actually passed their stress tests, and I know a good majority of them had passed their stress test, but I know some European ones. We had Walgreens there talking about that. And okay, here. So 32 out of 35 of the biggest banks in the US raised their dividends. So I know JP Morgan raised their dividend by 30% or something like that. So very nice jump up for JP Morgan. So that is basically it. I have my mic unmuted. I can see it moving here on the screen. So I have completed our weekly recap. If you did enjoy the video, remember to like and comment below if there's anything you would like added into these. If you didn't like the video, let me know in the comment section how I can improve it. If you are brand new to the channel, remember to subscribe for future notifications, or subscribe for future videos. Hit the notification button if you have not, to get notified every time I upload a new video. I release content every single week, and I'm starting to do some more live stuff. So as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them, tracking what is going on in the markets right now, in the financials and the transportation, trade wars, and other stocks that have moved up or down this week. So hopefully you found it entertaining. Thank you guys for tuning in. I will see you next time. Have a great day. Bye-bye.